Welcome, future captains of industry, to Intermediate Financial Accounting 2. This is where your journey as a financial professional truly begins to take shape. You're not just learning for exams, you're preparing to make real decisions that will shape businesses and communities. You've mastered the basics. Now it's time to tackle the real world of corporate accounting. Here, you'll move beyond theory and start to see how accounting principles drive the success of organizations, both large and small. This unit is your bridge from simple transactions to understanding the financial soul of a corporation. You'll discover how every number tells a story and how those stories influence the decisions of leaders and investors. We're moving beyond sole traders and partnerships to focus on Kenya's economic giants, limited liability companies like Safaricom and KCB Group. These are the organizations that power our economy, and understanding their financial workings is essential for any aspiring accountant. You'll analyze real financial statements, learning to interpret the numbers behind the headlines and gaining insights into what makes these companies thrive. How do these companies report their financial health? We'll peel back the layers of corporate accounting, exploring the systems and controls that ensure accuracy and transparency. You'll learn the language of the boardroom and the Nairobi Securities Exchange, becoming fluent in IFRS and the Kenyan Companies Act. These are the standards that guide financial reporting and protect stakeholders. Our approach is practical. Everything you learn will be immediately relevant in the Kenyan marketplace. You'll apply your knowledge to real scenarios, preparing you for the challenges you'll face in your career. We'll cover the regulatory framework, ensuring you understand the rules and guidelines that govern financial reporting in Kenya. You'll dive into share capital, loans, company financial statements, advanced partnerships, nonprofit accounting, cash flows, and post-year-end events. Each topic will build your expertise and confidence. Each topic is a vital tool for your future career. By the end of this course, you'll have a toolkit that sets you apart in the job market. This isn't just another course. It's your rite of passage into the world of professional accounting. You're joining a community of experts who keep the wheels of commerce turning. Get ready for a packed, exciting syllabus. Let's get started and take your first step toward becoming a leader in Kenya's dynamic financial sector. Before you can start crunching numbers or analyzing financial statements, you need to understand the rules that govern every aspect of corporate reporting. In Kenya, the Companies Act 2015 forms the backbone of corporate reporting. It lays out the legal framework for company formation, sets out disclosure requirements, and ensures transparency and accountability in business operations. Alongside the law, ICPAC, the Institute of Certified Public Accountants of Kenya, plays a vital role. It sets ethical and professional standards for accountants and ensures that International Financial Reporting Standards, or IFRS, are properly adopted and maintained. IFRS is the global accounting language. By following these standards, Kenyan companies make their financial statements understandable and comparable to those of companies around the world, building trust with international investors. This harmonization is crucial for global trade, cross-border investment, and economic growth, opening doors for Kenyan businesses to participate in the international marketplace. In this unit, you'll explore the key standards and principles that shape how companies report their financial performance and position to stakeholders. Financial accounting is shaped by a combination of law, professional oversight, and global standards, all working together to ensure accuracy and integrity in reporting. You'll learn to navigate this complex framework, understand your obligations as a future accountant, and appreciate the importance of compliance in your daily work. Mastering these requirements ensures your work is not only technically correct, but also legally compliant and ethically sound, qualities that define a trusted professional. You'll identify the legal and professional requirements for preparing and presenting company financial statements in Kenya, and learn how to apply them in real-world scenarios. This knowledge is your foundation for a successful accounting career, giving you the confidence to make informed decisions and uphold public trust. The regulatory framework is your compass, guiding you through the complexities of the accounting world. Learn it well, and you'll always know the right direction. Let's dive into the details that matter most for your future in accounting. The journey to global competence and professional excellence starts right here. Now, let's talk about how companies raise big money. Share capital is the owner's investment. Ordinary shares, preference shares, each with unique rights. We'll cover issuing shares from application to allotment and the accounting for shares at par, premium, or discount. You'll master forfeiture and reissue of shares when payments aren't made. On the debt side, companies use debentures and long-term loans, formal acknowledgments of debt, promising interest and repayment. We'll explore types of debentures, their accounting, and the redemption process. You'll prepare journal entries and ledger accounts for both shares and debentures. Understand how these transactions shape the balance sheet, equity, and liabilities. This is the foundation for analyzing a company's financial leverage and risk. Mastering capital structure is key to understanding corporate growth. Let's unlock the secrets of corporate finance. Here's where it all comes together. Preparing a full set of company financial statements is a crucial skill for every aspiring accountant. This process is the culmination of all your learning, where theory meets real-world application. According to IAS 1, you'll prepare the statement of profit or loss and other comprehensive income, statement of financial position, and other key reports that form the backbone of a company's financial communication. The statement of changes in equity is essential for tracking how a company's value evolves over time, reflecting the impact of profits, losses, and owner transactions. You'll also prepare the statement of cash flows, plus detailed notes that explain the numbers and provide context for decision makers. The income statement goes beyond revenue minus expenses. Learn to present gross profit, operating profit, and other comprehensive income, giving stakeholders a clear view of performance. The balance sheet is more detailed for companies. Classify assets and liabilities into current and non-current, and ensure everything is presented in line with international standards. Present property, plant, and equipment accurately, showing how these long-term assets support the company's operations and future growth. And master the equity section, which reveals the company's net worth and the interests of its owners. The statement of changes in equity links income and balance sheet, connecting profits, losses, and owner activities in a single report. It shows movements in share capital, reserves, and retained earnings, helping users understand how value is created and distributed. You'll reconcile opening and closing balances, track dividends, new shares, and revaluations, ensuring every change is accounted for. By mastering these statements, you'll present a fair, complete financial picture that supports business decisions and builds trust. This is the heart of the accounting profession, where technical knowledge meets ethical responsibility. Accuracy and clarity here set you apart as a professional, ensuring your work stands up to scrutiny and supports your organization's goals. These skills are essential for any accountant, whether you're just starting out or aiming for leadership roles. Let's build your expertise in financial reporting and set you on the path to a successful accounting career. Time to level up your partnership accounting skills. We'll tackle major changes, admitting new partners, retirement, death, and dissolution. Each event requires revaluing assets, sharing profits or losses, and accounting for goodwill. Learn how to adjust capital accounts and handle payments to retiring or deceased partners. Dissolution means selling assets, paying liabilities, and settling partner accounts. Prepare the realization account and apply the Garner versus Murray rule for insolvent partners. These scenarios demand precision and fairness. Mastering them prepares you for any partnership challenge. Advanced partnership accounting is a must-have skill. Let's get into the details. Let's shift to the world of purpose. Non-profit organizations, NPOs. NPOs like the Kenya Red Cross or your local club don't aim for profit, so their accounting is unique. Instead of a profit and loss account, they use an income and expenditure account to show surplus or deficit. Learn to distinguish capital income like donations for assets from revenue income, subscriptions, general donations. The receipts and payments account summarizes all cash transactions regardless of type. Your job: use this and extra info to prepare the income and expenditure account and statement of financial position. The balance sheet features the accumulated fund, not a capital account. By mastering NPO accounting, you'll serve a vital sector in Kenya. These skills are in high demand. Let's make a difference with your accounting expertise. Cash is king. Profit means nothing if a company runs out of cash. The statement of cash flows under IAS 7 breaks down cash inflows and outflows into operating, investing, and financing activities. Operating day-to-day cash from customers and to suppliers. Investing, buying or selling long-term assets. Financing, raising capital, repaying loans, paying dividends. Learn both the direct and indirect methods for operating cash flows. Analyzing all three sections reveals a company's true financial health. This statement is a must for every financial analyst. The year-end isn't the end. Events can happen after the reporting period that affect the financial statements. IAS 10 splits these into adjusting events, conditions existing at year-end, and non-adjusting events, arising after year-end. Adjusting events require changes to the financial statements. Non-adjusting events need disclosure if material. Examples: a court case settled after year-end, adjusting, or a fire in January, non-adjusting. IAS 8 covers correcting prior period errors. Material mistakes must be fixed retrospectively, restating comparatives and adjusting retained earnings. This ensures transparency and comparability. You'll learn to identify, adjust, and disclose these events and errors. Accountability is at the core of professional accounting. Get these right, and you'll build trust in your work. Let's master post-year-end events and error correction. How will you be assessed? Through continuous assessment and a final exam, just like at top Kenyan universities. Assignments and tests count for 30%, the final exam for 70%. Consistency is key. Attend, participate, and practice. The recommended textbook is Financial Accounting by Frank Wood and Alan Sangster. Completing this unit gives you technical expertise and sharpens your analytical and problem-solving skills. These are life skills, not just accounting skills. Kenya's companies and NGOs need professionals who understand IFRS and the Companies Act. The Big Four firms actively recruit graduates with these skills. This course is your ticket to top opportunities in finance, audit, and beyond. It prepares you for CPA, K, ACCA, and a range of financial careers. Embrace the challenge. Your future in Kenyan finance starts here. The world is waiting for you. Let's make your mark.